Internal Revenue Service IRS Tax News. Gig Economy Tips Taxpayers Should Remember. IRS Tax Tips 2020-75, June 24th, 2020. The gig economy, also called sharing and access economy, is activity where taxpayers earn income providing on-demand work, services, or goods. Often, it's through a digital platform like an app or website. While there are many types of sharing economy businesses, ride sharing and home rentals are two of the most popular. Here are some things taxpayers should remember. Income from these sources is taxable regardless of whether an individual receives information returns. This is true even if the work is full-time, part-time, or if an individual is paid in cash. Taxpayers may also be required to make quarterly estimated income tax payments and pay their share of Social Security, Medicare, or Medicaid taxes. So just to recap on this, the IRS is going to be more suspicious of gig workers because it's more difficult to track how much revenue they have earned. So just a quick recap on this. This has always been the case for sole proprietorships, but certain sole proprietorships are more difficult than others to kind of track the amount of income that they could receive. For example, obviously if you're an employee and you work for a business, the business wants to take the deduction of your work as a business expense. The IRS then has the leverage on the business to force the business then to actually tell them how much you earned with the use of a W-2. Not only that, but make it a requirement that they actually take the withholdings of your earnings and pay them directly with it so you don't even see them, right? So with a W-2 employee, the IRS knows exactly what you made. It has to be reported by the employer if they want to take the deduction, of course, and which is a huge deduction. So with W-2 employee, the IRS knows exactly what you've made, and so they have that. When you have a sole proprietorship, it's going to be more difficult because then you're your own business, right? Now you're reporting your own income, and now the IRS still would like to know how much income you actually have, right? They would like to have documentation of it. And that's where the Form 1099 miscellaneous typically comes in, because many small businesses will work for other types of businesses, right? If you're a small business and you work for another business, then the other business wants to take the deduction that they pay you as an expense. In order to do that, the IRS is able to basically kind of pressure them to report to have a 1099 that they send to the IRS that at least tells them how much the business, Schedule C business, earned, right? It doesn't tell them the amount of expenses, but at least they know the earnings that happen for small businesses that work for other larger businesses typically. And so they have that information, which gives them some, understanding, some insight into how much was earned for a sole proprietorship. Now, some sole proprietorships historically are a lot more difficult. They don't even have any idea of the revenue for them. So if you're doing something like a hairstylist or a nail stylist or something like that, or you work in a business where you get paid, you work at a restaurant or something, or a bar or something like where there's a lot of cash that is trading hands, then you're working not with another business that wants a deduction. You're working with customers that are paying you that aren't going to get a deduction anyways. If someone gets their haircut, they're not going to get a deduction for their haircut. So the IRS has no leverage to try to have the person that's getting their haircut tell the IRS that they paid for a haircut so that they can go to the hair salon and tell them that that they've made revenue and they owe them the revenue, right? So things like cash basis businesses have always been kind of a problem. The IRS doesn't like cash, right? Because that's going to be something that's not as transparent. There's not as much of an audit trail. So those have always been a problem. And now with the online jobs, you've got these gig workers, which is kind of similar because they might be paid from these different platforms, through these different platforms. And then the question is, how is the IRS ultimately they would like to see a 1099 from these different platforms. But if you work small jobs on different platforms, then you might work with companies that aren't 1099 you for one reason or another. And then again, the IRS is concerned about those situations because they have no idea what the revenue is because they don't have the 1099. So there's questions as to whether the companies that are working with gig workers, when they need to 1099 them and when Other kind of processors should 1099 them, such as if it's going through PayPal or something like that. You should have a 1099. But the general rule obviously still applies for a Schedule C business, whether you get the 1099 or not. Whatever income that you're receiving for the business should be reported on the Schedule C. So back to the text. While providing gig economy services, it is important that the taxpayer is correctly classified. This means the business or the taxpayers must determine whether the individual providing the services is an employee or independent contractor. Now, this is another problem that's always been an issue in terms of whether if you're doing work for a company, are you an employee or are you an independent contractor? Now, there's differences in terms of the benefits that you would get as an independent contractor or as an employee. There's pros and cons on either side. If you're an employee, then you're going to get the W-2 wages and whatnot, and it's kind of easier that way because then all the pressure is really on the on the business to process the payroll and do all the payroll taxes. It's more difficult for the business in some way, and they have to have the withholdings and everything, but you don't get the deductions as much as you might have if you're a contractor. The other benefits you have is they're withholding the Social Security and Medicare, but you're only paying supposedly the employee portion. Whereas if you're a contractor and you have a Schedule C business, your net income, you're paying both employer and employee portion of the Social Security and Medicare. So it's a question as to whether you want to be an employee or a contractor if you had the choice. But typically the IRS is, trying to say you don't really have a choice if you fall under the scenario where you are an employee, basically meaning that you're working for someone and you don't have as much control over how the job gets done. That's usually what the rules kind of tend towards. Like if you work somewhere even if you work from home and you work 9 to 5 for one other company and you got to show up at 8 and the end of the day and you're reporting to someone, every hour or so, then that sounds a lot like an employee because they're telling you not only what needs to be done, but how to do it and guiding you through that process. If on the other hand, someone gives you a job and says, hey, get it done by a month later from now and we'll talk to you then, and then you apply your own resources to get there and do it at your own pace and your own way, then you would tend towards more of a independent contractor. So those are the things that kind of differentiate those two, but obviously there's a lot of gray area in between those two. Typically the IRS is concerned with the contractor, of course, again, because it's more difficult for them to track the wages that are going to go to the contractor. So whether you're a contractor or an employee, you want to make sure that you have that settled down well in terms of what the conditions are to qualify for either one. Back to the text, taxpayer can use the worker classification page on the irs.gov website. There's a link to that here to see how they are classified. Independent contractors may be able to deduct business expenses depending on tax limits and rules. It is important for taxpayers to keep records of business expenses. Obviously, if you're an independent contractor, one of the benefits is that you may have business expenses that you would be able to deduct, whereas if you were working as an employee, you wouldn't be able to deduct those. But again, one of the cons is that people don't really realize oftentimes is the self-employment tax, which is basically the payroll tax, Social Security and Medicare, is going to be higher on the net income. Your self-employment tax, because you pay the employer and employee portion. So there is, pros and cons to either side. Back to the text. Since income from the gig economy is taxable, it's important that taxpayers remember to pay the right amount of taxes through the year to avoid owing when they file. An employer typically withholds income from taxes from their employees paid to help cover income taxes their employees owe. So obviously, if you're a W-2 employee, the employer is required to take the money directly out of your pay, obviously, and pay it directly to the IRS. Not only that, but report it, to the IRS. So that the IRS feels good in that situation. They have basically everything they need to know about that particular, place of employment. Back to the text. Gig economy workers who are not considered employees have two ways to cover their income taxes. So if you're not an employee and it's not a requirement of the person who is paying you to report your taxes, then of course you're going to have to track and report your own taxes and pay them. So you could submit a new W-4 to their employer to have more income taxes withheld from their paycheck if they have another job as an employee. In other words, let's say you have a W-2 job that you're working at, and you have a gig job that you do. You're making money on the gig jobs as a contractor, and you work as an employee at some other place. Well, that means that the money that you're getting from the gig jobs is going to be reported on basically usually a Schedule C income, increasing the taxes that you're going to be owing. And typically, if you're not including that income into the calculation on your W-2 wages for your employer, they're not going to be withholding enough. So one method, if you're working somewhere, then probably the easier thing to do if you have another job, a W-2 job, and the gig work, is to go to your place of employment and say, I'm going to fill out another W-4. The W-4 is the document that's going to show, how many exemptions you have and whatnot, so that to calculate the amount of withholdings that you're going to have. So you can say, I want to increase my holdings. I'm going to fill out the W-4, give it to the Human Resources Department, and they will then increase the withholdings based on the fact that I have income other than this job from the gig jobs. Now, when you do that, remember that if you go to the Human Resources Department at your place of employment and say, hey, look, could you give your instinct will say this, hey, will you give me some advice on what to do here? Because I got a gig job and I'm trying to have enough withholdings and whatnot. And you're going to inevitably hear from the Human Resources Department, I can't give you any tax advice on that, right? They're not going to be able to, because they're liable to do that typically. So really, all you can, for your place of employment, you're going to want to say, hey, you're going to go to Human Resources and say, hey, I need to, redo my W-4 form to take into consideration the gig work. And you can't really, you're pretty much not going to get any advice. And then you got to go to your tax professional or whatever, your accountant, and ask for advice on how much you need to withhold. And then once you fill out the W-4, then you go back to Human Resources and tell them, hey, I've refilled it out, and this is what I want. This is what I want done with it. So that's one option. The other option is to make quarterly estimated tax payments. There's a link to the estimated tax payments here to help pay their income taxes throughout the year, including self-employment tax. So let's say, for example, you work at a gig worker that has another job that's just not making enough money to pay the taxes because your gig work's doing really well, or you do gig work full time and you don't have another job. Well, then you're not going to be able to withhold from the employer, and you'll have to actually pay the IRS quarterly. So what that means then is that then the IRS wants their payments quarterly throughout the year in order to avoid penalties. Now, this year, this is kind of a funny year because they've been extending deadlines and whatnot. But the basic point is that you need to pay throughout the year, just like you would if someone was taking the money out of your W-2 wages. But you don't have to do it quite that often. You have to do it quarterly and give them the quarterly payments. So to do that, though, it's a little bit more difficult than you would think, because you have to estimate what your earnings are going to be and then make your quarterly payments based on the estimate throughout the year, even though you don't know what your tax will actually be until basically the end of the year. So you have your estimated tax payments that you can use to do that here. Back to the text, the Gig Economy Tax Center, there's a link to the Gig Economy Tax Center here on irs.gov, answers questions and helps gig economy taxpayers understand their tax responsibilities. The tax filing deadline has been postponed to Wednesday, July 15th, 2020. So, we've extended the deadline, which is nice. So now, but it's coming up now. So July 15th, 2020, deadline for the 2019 tax return. The IRS is processing tax returns, issuing refunds, and accepting payments. Taxpayers who mailed a tax return will experience a longer wait. There's no need to mail a second tax return or call the IRS. So obviously they're still trying to push away from this. They've been doing it for a long time, go away from the paper filing, and with the social distancing, that's gone. They've increased that. So paper filing will take longer. Realize the IRS really wants, it looks to me like they really want the tax returns to be filed electronically, and they're even pushing for the payments to be made electronically, or refunds to be given electronically with bank feeds as much as they can. So that'll probably be faster. So more information is down below here, and there'll be a link to this in the description.